Hi, everyone. This is Jim Raspberry from Raspberry Financial Services with our February 2014 video economic update. In this update, we'll be talking about some of the major events that moved markets last month, and we'll also be discussing what might affect us in the days and weeks ahead. If you don't mind, we ask that you hang on and listen to the required disclosure statement at the end of this broadcast. Now, after disappointing market performance in January, stocks really shook off their winter gloom and roared back in February. The major averages all performed well last month. The S&P 500 added more than 4% in February and reached a new record close. In February, the S&P gained 4.3%. The Dow grew 3.2% and the Nasdaq added 5%. Earnings season mostly wrapped up last month, and with 487 of the S&P 500 companies reporting in, we can say that fourth quarter 2013 was a modest success. Total earnings for S&P 500 companies were up 9.3% from the same period in 2012. This great news is tempered by the fact that total revenues were up less than 1%. This means that businesses are still struggling with weak global demand, but are managing to generate profits. And what that tells us is that if stocks are able to generate gains under such mediocre business conditions, we can hope for more upside if demand picks up. Economic data in February was a mixed bag, though. The unusually cold winter weather put a serious chill on many economic sectors, such as construction and manufacturing and the housing market. These seasonal variables make it difficult to know whether the positive economic trends that began in 2013 are continuing in 2014. The January jobs report was weak, showing uninspiring employment gains. Though progress is still being made, it's happening pretty slowly. On the other hand, winter weather may have actually played a role and affected the job hunt for many Americans, meaning we can hope for better growth once the weather warms up, and hopefully that's coming sooner than later. On a more positive note, consumer confidence ticked upward at the end of February as younger Americans registered increased optimism about the economy. This gives us hope that confidence and consumer spending may pick up after the bad winter weather ends. Overall, we're inclined to hold off on drawing any conclusions on the economy until we see more data. New Fed Chairman Janet Yellen spoke before Senate at the end of February and reassured markets that tapering would continue unless negative economic data warranted a pause. She also confirmed that interest rates would stay low after unemployment dropped below 6.5%, which isn't a number that represents full employment. We're glad to get more guidance from the Fed and confirmation that Fed economists are carefully weighing recent weather affected data. Stocks tapered their rallies somewhat at the end of February due to fears that political unrest in Ukraine would turn into outright war with Russia. Ukraine's president was ousted last month after weeks of widespread protests. Analysts feared that an armed conflict with Russia might disrupt important natural gas and oil supplies. It's too soon to know how the whole situation will play out, but we're watching it carefully and actively developing strategies to mitigate risk for our clients. While we can't predict the future, we know that these geopolitical events have rarely had more than a temporary effect on global markets. So, looking ahead, investors will probably see some more volatility as traders digest the news from Ukraine and look for more clarity in economic data. Hopefully, a strong February jobs report that came out last week and warmer weather will show investors that there's still market upside to be had. Once again, this is Jim Raspberry with Raspberry Financial Services signing off for the month of February 2014. I hope you found this commentary interesting and informative. We'd love to hear what you had to say in the comment section below. If you have any questions about what you heard in this update or would like to discuss your personal financial situation, please give us a call at 601 335 0024. We'd be happy to talk to you. And now for our disclosures. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. I am a registered investment representative, and securities are offered solely through Emeritus Investment Corp., AIC, member SIPC, FINRA. AIC and Raspberry Financial Services are not affiliated. Additional products and services may be available through me or Raspberry Financial Services that are not offered through AIC. I can be contacted by calling 601-335-0024 or by securities email, jim@raspberryfinancial.com. Thanks again for watching. We appreciate your time. We look forward to meeting and talking to you next month.